Good afternoon, and welcome to IMA's Strategic Management Series. The title of today's presentation is Strategic Analysis for Management Accountants and CFOs. I'm Margaret Lockery, and I'll be your host for today's Strategic Management Series webinar. It's a pleasure to have Bill Duchan with us, and he will be serving as moderator for today's presentation. Bill is the Director of Credentials and New Initiatives at the Institute of Certified Management Accountants, ICMA, the certification division of IMA. Bill co-developed the Certified in Strategy and Competitive Analysis, CSCA program, ICMA's credential for certified management accountants. Bill has the responsibility for the ongoing development and administration of the CSCA exam and is also actively involved in the development of the CMA exam. Bill has extensive finance and management accounting experience in the consumer packaged goods industry. His experience includes financial planning and analysis, strategic planning and corporate development, and financial reporting. Bill is a CMA and a CFM. He earned a Bachelor of Arts degree from the University of Pennsylvania and an MBA from New York University. Hi, Bill. Welcome to the program.
Thank you, Margaret. I'm very excited about our subject today. On behalf of IMA, I'd like to welcome everyone to today's session. We have a great topic as part of our strategic management series. It should be of significant interest to all of our members, whether enriching their strategic analysis skills as management accountants or perhaps preparing for the CSCA exam. At this time, I would like to introduce our featured presenters. With us today, we have Dr. Mark Frigo. Dr. Frigo is founder of the Center for Strategy, Execution, and Evaluation and its Strategic Risk Management Lab, as well as the Ozerski Endowed Chair of Strategy and Leadership Emeritus in the Driehaus College of Business at Chicago's DePaul University. He's the author of 7 books and over 125 articles published in leading business journals, including Harvard Business Review. He's also the co-author of the book Driven, Business Strategy, Human Actions, and the Creation of Wealth, which describes the strategic activities of high-performance companies as described in the Return-Driven Strategy Framework. And he also has created a recent COSO report called Creating and Protecting Value, Understanding and Implementing ERM that came out in this year. Dr. Frigo is the co-author of the IMA SMA titled Strategic Analysis, Methods for Achieving Superior and Sustainable Performance, which is the subject of today's webinar. You can reach Mark afterwards at mfrigo@depaul.edu. And please, everyone, join me in welcoming Dr. Mark Frigo.
Thank you. I'm very pleased to participate in today's program.
Thank you, Mark. At this time, I would like to introduce our co-presenter. That's Dr. Kip Crumley. Kip is the Director of Research for IMA. Prior to joining IMA, he spent 18 years as a management accounting professor and worked for 2 Fortune 500 companies in a variety of management accounting-related positions. As Director of Research at IMA, Kip is responsible for developing and producing research studies on a variety of accounting and business topics, including the SMA we mentioned, and as well as overseeing production of the IMA Educational Case Journal, known as the IECJ, as well as managing the academic grant program for IMA's Research Foundation. And in addition, he has various other projects and programs in support of IMA. Please join me in welcoming Dr. Kip Crumley.
Thank you, Bill. I am really excited to be here today.
Great. So before turning our presentation over to our speakers, I would like to go over the learning objectives for today's program. And hopefully you can all see them. After participating in this webinar, you will be able to develop your strategic thinking and strategic communication skills. You should also be able to recognize which strategy frameworks work best in given situations and identify the strengths and weaknesses of various strategy frameworks. You will be able to describe leading strategy frameworks and how to use them. And finally, you will be able to discuss how leading strategy frameworks in strategic analysis can be used in your organization. We're looking forward to a really informative presentation. So at this time, I'm going to turn it over to Kip to begin.
Thanks, Bill. The overall objective of the SMA, and really what it boils down to for this webinar, is to help management accounting professionals play a valuable leadership role in the strategic management and strategic analysis processes of their organizations. Now, the SMA on the left of the screen, strategic analysis, methods for achieving superior and sustainable performance, can be found on the IMA website, and I would like to just show you how you can find it. You go to the main page of IMA, imanet.org. You can just put in the title or part of the title in the search, and you'll probably get it along with some similar reports, and that's a good search feature really for anything you might be looking for on the IMA site. More specifically, if you click on the Research and Publications tab, it will take you to several sources of thought leadership that IMA provides, including statements of management accounting. So hope you will check out this resource. We have a lot of research on a lot of different areas that you may find helpful. All right, back to Mark.
Thank you, Kip. You know, the goals of the SMA that Kip and I developed are basically to help management accounting professionals play a valuable leadership role in strategic management and strategic analysis within their organization. Here we list, 5 primary goals of the SMA: to learn about innovative ways that management accountants and CFOs can add value in the strategic analysis process within their organization, to be able to apply traditional and newer strategic analysis and strategic planning tools and methods into, and we organize them in 3 general categories in terms of their organization. To identify key factors affecting strategic analysis today and ways to address them, and to help lead strategic analysis to achieve superior and, very importantly, sustainable performance in today's global economy. And finally, to learn how strategic analysis can help an organization to create long-term sustainable value. With that, let me ask Kip for some comments on our goals for the SMA.
Yeah, thanks, Mark. Now, some listeners might be saying, well, I'm an accountant. They don't pay me the big bucks to help make strategic decisions. Now, to which Mark and I might reply, well, maybe they would if you took on a strategic role. So please give this some serious thought. It's not always easy because you're super busy with a lot of the required reporting. But please keep an open mind here. This really can help you contribute value to your organization. Thanks, Mark.
Thank you, Kip. Let's proceed to the tools and frameworks that we have. We have actually 14 different strategic tools and frameworks in the SMA that are described. And we categorize them in 3 categories. First, environmental scan and competitive analysis. Number 2, internal, external strategic analysis. And number 3, innovation, change, and market disruption. Although these categories are not mutually exclusive, they help us to understand the types of methods that you can use in your strategic analysis initiatives within your organization. With that, let me ask Kip for his comments.
Yeah, just as an early warning here, please don't try to use all of the methods we'll be talking about. The tools themselves often have overlaps, but the names can help us remember what their specialty is. Different tools may be most useful in different situations. All of them have strengths and weaknesses, which we'll get into a little bit in today's webinar and in more extensive detail in the SMA. Our goal really is to help you choose the one or maybe 2 that are best in a given situation, or maybe the ones that just click with you most personally. Okay, thanks, Mark.
Thank you, Kip. Let's take a look at some of the frameworks that are discussed within the SMA. So in the category environmental scan and competitive analysis, we have Porter's Five Forces, which is a very popular, for many, many decades, strategy approach for analyzing the environment and competitive analysis. We also have STEEP analysis. STEEP stands for social, technological, economic, ecological, or environmental, and political analysis. And we also have scenario planning. And by the way, scenario planning has gained much more importance given the pandemic scenario we are still experiencing. So that's one approach I think that you see coming to the forefront. And then the fourth item is strategic risk management, which we'll describe later in this program. And this involves having risk management as part of the strategic analysis process. With that, let me ask Kip for some comments.
Yeah, Mark, I really like your comment there, emphasizing that scenario planning can be especially helpful now during the pandemic. I would also add the STEEP analysis could be as well. I mean, that really guides you through thinking about social, technological, economic, ecological, or environmental, political types of risks and trends. And so that, I think, can also be especially helpful now. But just keep in mind, really, to do any of these methods, you've got to know how the business is run. You need to know, what are the influences or the major levers of this business, who are the customers, their buying habits, strengths and weaknesses of competitors. And again, you might be thinking, well, how can I know all these things? I'm an accountant. Well, we suggest some ways in the SMA, and just some that I think are really helpful: asking questions about the operational side of the business, sit in on meetings, really try to build good relationships with those outside of accounting and finance. And yeah, you might even facilitate monthly reviews of the strategy analysis, which often doesn't happen on its own at a company. So you might even take the lead on that. That's it. Thanks, Mark.
Thank you, Kip. The second category is internal, external strategic analysis. The first method listed is a very, very popular method. It's been around for a while and it still is very popular. SWOT analysis, strengths, weaknesses, opportunities, and threats, which we'll describe later in this program. Value chain analysis, strategy maps by Bob Kaplan and Dave Norton from Harvard Business School. Gap analysis, good to great hedgehog concept by Jim Collins, and return-driven strategy as developed at DePaul University. Chip, your comments on these frameworks?
Yeah, these are all really great in my view. I've seen them all done very successfully. Just kind of big picture here, someone might be wondering, okay, should you do the environmental scan and competitive analysis first, or the internal external strategic analysis first? And the answer, I would say, is could be either way. As long as you do both types in some way periodically. You may have recently done an environmental scan of competitive environment. So now maybe it's time to look internal at your strengths and weaknesses and try to identify opportunities in the market. But it should be an iterative and ongoing process either way. Thanks, Mark.
Thank you, Kip. Let's go on to the next third category in the SMA: innovation, change, and market disruption. Here we have Blue Ocean Strategy, which we'll describe later in this program, from INSEAD, Creating Shared Value, developed by Michael Porter and Mark Kramer at Harvard Business School, Disruptive Innovation, developed by Clay Christensen at Harvard Business School, and Reverse Innovation, developed by Vijay Giridharajan from Dartmouth Tuck Business School. These are all methods of addressing innovation and change and market disruption, which are so important in today's fast-changing environment, whether it's technological change, market shifts, or other political changes that are occurring. Your comments, Kip.
Well, yeah, I mean, there's a few really great books relating to innovation and change, and one I'll just plug for here regarding the disruptive innovation is Clayton Christensen's book, The Innovator's Dilemma. Really a great read if you're trying to help your company be more innovative, say during a pandemic or something. Thanks, Mark.
Yeah, that's a good point, Kip. In the very back of the SMA, we have a summary of further readings, and Clay Christensen's book, The Innovator's Dilemma, is listed, as well as others, for support of our SMA. Great, thank you. Let me now go to, I see we're at our first polling question, so let me turn this over to Bill.
Great, thanks, Mark. Attendees should see the first poll question now open on your screen. If you have any trouble viewing the poll questions today, please refresh your browser, which should correct this type of issue. Would like to remind all participants that you will have about 30 seconds to respond to each of the poll questions today, and you may begin responding as soon as the question appears on your screen. The first poll question today is, which strategy frameworks have you used previously? And you can select all that apply. A is SWOT analysis. B is Porter's 5 forces. C is return-driven strategy. D is blue ocean strategy. And E is good to great strategy. After you select your answer, please be sure to click the submit button below to ensure that your response is recorded. Now I'm going to turn things back to Mark so we can find out how our audience has responded.
Thank you, Bill. Let's take a look at the responses. So you can see that SWOT analysis has almost 90% previous use. Porter's 5 forces, highly used, as well as the return-driven strategy and blue ocean and good to great. These are all I think expected. The SWOT analysis has been around for so long, and so has Porter's 5 forces. Your comments, Kip?
Yeah, those two are probably the most well-known, and the other 3 not so much. But hey, that's why we're here today. Check them out.
Good point. Let me proceed then to the next slide, and this is a very important slide because it really addresses some of the ideas that Kip mentioned earlier. How can CFOs and management accountants use strategic analysis? And this is really a summary of some of the ways we have seen management accountants and CFOs and finance organizations use strategic analysis. So number 1 is helping the company to develop innovation and growth strategies, which are so important in today's economy. Number 2, reviewing and refining strategies to create greater long-term sustainable value. Number 3, analyzing where the company or business unit would be within the life cycle of an organization. This will be addressed later on when we do strategic life cycle analysis, which is featured in a October 2020 article in Strategic Finance. Communicating the strategy within the company and to the board of directors. So then we call this strategic analysis communication skills. Helping information for investor relations presentations, usually delivered by the CFO, and evaluating merger and acquisition activities and opportunities, as well as risks. Assessing the strategic risks of the organization, which we'll also describe later in this webinar. And then also, this is very important, developing a strategy for the finance organization, actually applying some of these strategy frameworks, SWOT analysis, return-driven strategy, and so forth, to the finance organization to help learn the process, but also to create a strategic finance organization within the company. And we've presented this a number of companies at DePaul University in our executive education programs, leading to really starting with the process of, well, let's apply the strategy frameworks to the micro level, to the finance organization, and then we can also learn them better and apply them forthrightly to some of the business challenges. Now let me transition to the next slide. So the value of strategic analysis skills. This is a quote, that I use in some of the workshops I lead with CFOs and finance organizations and management accountants. So it's our belief that strategic analysis skills can help CFOs and management accountants to help their companies create greater long-term sustainable value. That greater long-term sustainable value is really addressed in a series of articles in Strategic Finance, which was launched by an article I did with Dominic Barton, the head of McKinsey & Company. But the key right now for companies is to find strategies that will be able to allow them to create long-term versus short-termism, long-term sustainable value creation, which is ultimately the objective of strategic analysis. Now let me transition to our second poll question and turn it over to Bill.
Thanks, Mark. Attendees may respond to this question immediately as I read through the question. If you cannot see the question, please refresh your browser. Our second poll question is, how would you rate your skills in using strategic analysis tools? Choice A would be high, B would be relatively high, C, average, D, relatively low, and E, low. Please note that after selecting an answer, you must click the Submit button, which is located on the right side of your screen, just below the response options, in order to successfully record your answer. Now I'm going to turn your attention back to Mark so that we can find out how our audience responded.
Thank you, Bill. So as we have a good number of responses, and almost looks like a bell curve, or average is the modal response, and we see on the it is kind of a very bell-shaped curve. Your comments, Kip?
Yeah, I mean, I'm sure our attendees are more familiar with some tools than others, and maybe some we've talked about already. Haven't really studied too much, and that's okay. Again, you don't need to use all of them or shouldn't even try to, but we would recommend being acquainted with each of them to make sure you're using the ones that make the most sense to you. That's all.
That's a good point, Kip. We have 14 strategy frameworks in the SMA, and obviously, as Kip mentioned earlier, not advisable to try to use all of them, although sometimes it's useful, very useful, to integrate a couple of them together. They are synergistic and reinforcing together. Thank you, Kip. Now let's go to reviewing some of the frameworks. In the webinar, we don't have time to review all 14 tools and frameworks that we described in the SMA, so let's go into some depth on the 6 of them. Here are the 6. Porter's 5 forces, SWOT analysis, return-driven strategy, blue ocean strategy, good to great strategy, and strategic risk management. Let's take a look for a moment in terms of how Kip and I developed the description of each of the frameworks in the SMA. For each of the frameworks, we describe the purpose, we describe how it works, we describe the strengths and limitations, as well as we describe the role of management accountants in using those frameworks. So with that, let me ask some comments from Kip.
Yeah, thanks. I really feel this SMA is a pretty unique document. As you said, it goes into details, showing the purpose, how it works, strengths, limitations, and role of the management accountants, which is not very easily found in other sources, and I think that's a big plus for this. But not only that, we also have quite a wide array of real-world examples from companies that most people have heard of: Tesla, Lego, Eni, the Italian energy giant, Walgreens, Netflix, Adidas, Coca-Cola, and Nestle. Very interesting applications of many of these frameworks. Thanks.
That's a good point, Kip. The examples that Kip and I put it into the SMA kind of bring alive how the frameworks work. I think that was a big plus in terms of our design and development of the SMA. So let me now transition to the first framework that we had on our list of 6, and that is Porter's 5 forces driving competition. And the 5 forces are: number 1, the threat of new entrants to the market; number 2, bargaining power of customers; number 3, bargaining power of suppliers; number 4, threat of substitute products; and number 5, level of competitive intensity within the industry. Those are analyzed using this graphic, or the 5 forces, to understand the type of competitiveness within an organization as a way of assessing it. Your comments, Kip?
Yeah, I mean, this really kind of forces you to address all the different forces that can come to your organization, and they're not always covered. And you know, the management accountant can really contribute to this. They could provide, you know, what type of competitive intelligence do we need? How can we get discussions of these potential threats? Because everyone's going to have a different opinion about what the big threats are, and just help this analysis to happen. But it's very valuable. Gotcha.
Thank you, Kip. The second method, strategic framework that we presenting this webinar is SWOT analysis. You know, SWOT analysis is based upon strengths, weaknesses, opportunities, and threats. The strengths and weaknesses are usually considered internal. The opportunities and threats are generally considered external. So for strengths, usually our objective is to leverage them to create greater value. With weaknesses, our objective generally is to address those weaknesses. For opportunities, our objective generally is to harvest the value from those opportunities, prioritize them. And then as far as threats, usually you want to address the threats or attack the threats and really assist in understanding how we can do that. The SWOT analysis can be used at the departmental level, the business unit level, and the company level. Now let's move to the next poll question.
Thanks, Mark. As I can see from today's attendee list, we have folks from all over the world in every imaginable industry, as well as government and not-for-profit. And fortunately for everybody, these models and frameworks are adaptable for broad usage. The next question, which you can respond to immediately, is how would you rate your company's efforts to do a 5 forces or SWOT type analysis in the past few months? And the choices are A, high; B, relatively high; C, average; D, relatively low; or E, low. And remember, after you choose your answer, click the submit button, which is located below the response options, so that your answer will be recorded for CPE purposes. Now I'm going to turn your attention back to our presenter, Mark, so that we can take a look at the results.
Thank you, Bill. Let's take a look at the results. So this again looks like a normal distribution, as was that previous question. In today's, although we have a little bit more here relatively high, I would suspect that more of this like SWOT analysis may have been being done recently given the pandemic scenario. Your comments, Kip?
Yeah, strategies that worked before the pandemic may need an overhaul. And so if the question had been, how much does your company need this type of analysis, my guess is we'd probably see more high and relatively high. Again, it doesn't matter here whether it was the 5 forces or SWOT analysis per se. There are other frameworks that can help, in your particular situation. But a lot of industries, say the travel industry, they have to find new strategies or new customers, so to speak. So it's a good time to do it if you're not doing it now.
Thank you, Kip. Let's transition to the next slide. This slide is entitled, "What can we learn from high-performing companies?" This question is the basis of the Return-Driven Strategy Initiative at DePaul University in the Center for Strategy, Execution, and Evaluation. And it's based upon over a decade of intensive global research on high-performing companies around the world, where over 15,000 companies were screened using over 30 years of data for each company and analyzed carefully as far as which companies created long-term sustainable value. We define that as superior and sustainable return on investment, and investing in the company in a disciplined way to achieve sustainable long-term value creation. And that resulted in the third criteria in our study, which was superior shareholder value creation. So that's all described in the book Driven. Notice the book Driven, the subtitle is Driven. The subtitle is Business Strategy, Human Actions, and the Creation of Wealth. The key there is that the business strategy is the plan or intentions of the company. The human actions would be the execution, strategy execution of a company. And then the result, hopefully, if done well on both sides, is the creation of wealth. Wealth is simply defined as accumulated value creation. The framework itself, Return-Driven Strategy, is a hierarchy of 14 strategic activities listed on that pyramid, as well as 3 foundations: genuine assets, forces of change, vigilance, and discipline, performance measurement, and valuation. The book Driven is in the list of further readings, as well as several articles in Strategic Finance that describe it. The framework also, by the way, has been applied and presented to literally thousands of CFOs and executives around the world, and it has been the subject of various workshops for companies and at universities and business schools. Let's take a quick look at the framework itself. The framework itself is a hierarchy that begins with, notice, tenet 1, ethically maximize wealth. Ethically means adhering to the ethical parameters of your constituents and communities. Maximize wealth means making the most from your resources, creating the most accumulated value with them. And then the second 2 tenets would be fulfill otherwise unmet customer needs and target appropriate customer groups. This is what we call the goal tenets of the framework. And by the way, recently companies have noticed that the unmet needs of their customers have changed. So they've had to change their strategies a lot in the last few months. The next row would be we call them the competency tenets: innovate, deliver, and brand offerings. And then the final row would be the supporting tenets: partner deliberately, map redesign processes, engage employees and others, balance focus and options, communicate holistically. Those all fit together in a hierarchy where you can analyze the strategy of a business unit or of a company and find ways to improve it. The genuine assets would be the unique capabilities and resources the company has that give it a competitive advantage. And the next one below it is vigilance, the force of change, which is risk management, and so important in today's environment. And then finally, the bedrock foundation is discipline, performance, measurement, and valuation. This should be very close to the heart of CFOs and management accountants, because the foundation of strategy execution is having the right discipline, performance, measurement, which is very highly aligned to valuation and value creation. And that's the framework. The framework itself has been used extensively. It's been used by CFOs, it's been used by executive teams. And on page 26 of our SMA, we actually have an analysis. We have an assessment tool that you can use on a 1 to 10 assessment tool for. So each of one of these particular 11 tenants, we give you some questions and we ask you to rate your company or the business unit on a 1 to 10 scale, 1 being poor, 5 average, and 10 being outstanding. So in the SMA itself, we provided a way for you to take that framework and to use it relating to the 11 tenants. As Kip mentioned earlier, nothing describes a framework better than a great example. And we're going to introduce an example here, and we describe the example in the SMA itself. This is a company, Reading Bakery Systems, located in Reading, Pennsylvania. And you're going to hear a couple of short video clips in a few minutes from Terry Groff, who is CEO and chairman of the board of Reading Bakery Systems, where he presented a keynote address at a CFO summit in Miami, describing how, specifically, CFOs and management teams can use the return-driven strategy framework. Here's the way that Kip and I described it in the SMA. We basically gave a little bit of a, background of the company. We gave the challenge that the CEO had in terms of trying to get the strategy to be a lot more value creating, actually, because the company was not doing well at the time. And then we also highlight specifically which of the tenants were most important to the success. Tenant 2, fulfill otherwise unmet needs. If a company is fulfilling otherwise unmet needs that are not that differentiated, if they're highly commoditized, they are at risk. Targeting appropriate customer groups by their unique needs. Innovating offerings to achieve those unmet needs. Branding the offerings so the companies associate the offering with that need fulfillment. And then really having really great employee engagement. So to bring it alive, we're going to show a short video clip of Terry Groff presenting this at a CFO summit to CFOs, about a 2-minute clip. So with that, I'll ask for the video segment to begin. Thank you.
By the end of 2006, I was, by the way, in 1999, and you see here the year 2000, we hit the bottom. And what I decided to do was work extra hard. And I got on everyone's tail, and I forced things to happen. I stayed on it and stayed on it and stayed on it. And I drove the revenues up, I think. And then I ran out of energy. And it sort of drifted sideways again. And then the minute I relieved the pressure, it fell off. And that's when I happened by accident. My son was going to DePaul University, and he said, there's a seminar, maybe you ought to attend. And I said, well, I know everything. I've been running business for 30 years. I should know this. He said, you should come. So I went and I heard Dr. Frigo speak. And the reason I'm up here is that resulted in probably a $20 million bump in my valuation. So I'm an advocate of what I'm about to tell you here. I can tell you. We looked at this pyramid. I invited Dr. Frigo down to Indianapolis for our annual meeting, and he spent 2 days there. And we went through this in fine detail. It took us 2 days. We could have spent more time on this. And every one of them, as simple as it sounds, there was something Zen in the background. I think about the Zen saying, the snow falls, each flake in the appropriate place. And you'll think about that, and maybe flying home tomorrow, you'll think about it, and you realize what that means. It's a very, very interesting and implicative statement. Everything on the pyramid is that way.
So let me make a few comments about the video clip that you just saw. In terms of what Terry was describing, was that in the year 2000, as he said, his company had hit bottom. And he's trying to find ways to increase the growth and profitable growth of the company. He happened to be invited by his son, who was going to DePaul University at the time, to attend a seminar that I was giving in the graduate school, which he did. And I could tell right away that he understood how the framework worked from just a few minutes of seeing it presented. And within a couple of weeks, we had presented it down at his company's strategic planning session, and they embraced it and applied it to achieve a lot of value creation in the process. So I also have developed it, and I still have it, a workbook type of project, which includes these videos. Now let's go to, and by the way, if you notice what he had said is on the bottom of his slides was that changing the way you think, and that was critical because that's what the framework allows companies to do. Now let's take a look at a second video clip that describes the results.
I only wanted to point out that all of these, the tenets give you a framework, and they give me a framework of looking at the business. And as CFOs, you understand how your businesses work. Wouldn't it be great if all of your top management folks understood the business the same way you do? Wouldn't it be great? This system gives you a common lingo. It gives you a way that you can communicate and look at the business together, and you can really help guiding by asking those questions. I was sitting in an engineering meeting the other day, and someone came up with an innovation and an idea, and somebody said, we could do this. And someone else in the room, another engineer, said, well, what's the unmet need here? And I was just delighted. I thought, that's great. That's exactly the right question to ask. And it didn't have to be asked by me. It was asked by somebody in the structure. So we review this structure every year. Next week, I'll be in Indianapolis for our annual strategic planning meeting, and we'll go through this step by step. We'll look at all of these things, and it'll help us in our business for sure.
So let me comment on that video clip. That video clip really describes some of the key items that Kip and I described in the Ready Bakery Systems case vignette in the SMA. And what he really said was that it was a different way of looking at his business. It allowed them to have the same, he called it common lingo or language, because the term-driven strategy does have a very powerful language and logic, which everyone is rowing in the right direction to do so. And if you notice, he called attention to tenet number 2, fulfill otherwise unmet customer needs, which is the critical tenet in terms of value creation of any organization. So with that, I'd like to transition to the next slide. Now, this slide is related to return-driven strategy because the research behind the return-driven strategy framework itself is based in part on life cycle analysis. That is, understanding where the company is or a business unit is within a life cycle. As you can see on the graph on the right side of the slide, you have 4 phases of any business: high innovation, competitive fade, mature, and failing business model. Now those lines, the red line represents economic returns or return on investment. The dotted blue line represents invested capital, reinvestment rate in the business. And by the way, our analysis, our data includes including R&D investments, which we capitalize in our analysis. And what we see is that companies in the high innovation phase of a business, they usually begin with very, very high reinvestment rates in the company. They could have negative return on investment for a while, and then that will hopefully increase and continue to increase during that high innovation phase. In the competitive phase, we often see competition coming into play. And that's where we see decreases in the ROIs, as well as if we have a decrease in ROI and concomitantly a decrease in the reinvestment rate, we can see a company continuing to fade. Fading means their ROIs are decreasing and the competitive advantage is decreasing. And ultimately, they will reach what we call the mature phase. The mature phase is where companies are earning a profit, they're earning an average ROI, and they can go back and forth, tread water during that process, but basically they become an average company. And then ultimately, if they become complacent, then the company can enter the next phase, which is the failing business model phase. So in the strategic life cycle analysis framework, Bart Madden and I, he's the author of the book Value Creation Principles. It just got published by Wiley Publishing this year. It's mentioned also in our book, in our SMA. We describe a very good process for CFO teams, management accounting teams, to actually conduct a strategic life cycle analysis. They can do it on the business unit, they can do it on the company as a whole, but it helps them in terms of their capital deployment, whether it's capital investments, research and development investments, and so forth. It's a good way to take the skills of the CFO and the finance organization, couple it with strategic analysis, and develop a strategic life cycle analysis. In fact, when asked, where should CFOs and finance companies, finance organizations begin in strategic analysis, I would say to do strategic life cycle analysis as well as coupled with the return-driven strategy framework as an assessment of their existing strategy. And I also wanted to mention that this article that's on the left side of the screen of this slide is an article that just appeared in the October issue of Strategic Finance, which is available to you. So with that, let's go to the next poll question. Bill?
Great. Attendees may respond to the question immediately as I read through it. Our fourth poll question today is, where in the strategic life cycle would you say your company or business unit or organization is at this time? Is it A, high innovation startup, B, competitive fade, C, mature, or D, failing business model? After selecting your answer, please be sure to click the submit button below to ensure that your response is recorded. Now I'm going to turn your attention back to Mark so we can find out how the audience responded.
Let's take a look at the let's take a look at the responses. So here we say, well, yes, this is saying that a majority are mature, and I think that's actually true. If you look at the profile of, let's say, the S&P 500, you'll see that if you take the life cycle analysis framework, that a majority of companies are in the mature phase. They're profitable companies. They earn an average rate of return on invested capital. Less so, well, the failing business model, there's fewer of those because usually they don't last very long, unfortunately. And as far as the high innovation startup and competitive fade, those are also pretty representative of what we see in the profile of the Fortune 500 companies. Kip, your comments.
Yeah, I think the pandemic may have accelerated the fade for some companies, and it could very well be a time to innovate. I like to say the best time to innovate is now, because your business may only be one disruptive innovation away from being a failing business model. So keep innovating, and even disruptive innovation using maybe a blue ocean strategy or something similar to that. Thanks.
Good point, Chip. The idea of innovation being the CFO's top priority was addressed in an article I did with the CFO of Johnson & Johnson Innovation in Strategic Finance, and described that as a key hallmark of that organization. So as Kip mentioned also, we always say in strategy, disrupt yourself before others disrupt you, using that approach. Now let's go to the mentioned blue ocean strategy that Kip just mentioned. So blue ocean strategy has been a very popular strategy approach developed at INSEAD, and it's something that is a powerful way to look at a company in terms of creating entirely new market space, and basically defining an untapped market space, demand creation, and an opportunity that would be highly result in very high profitable growth. So to take an example, here's a good way to look at blue ocean strategy. We compare red ocean strategy to blue ocean strategy. Red ocean strategy, which most companies are involved in, compete in existing markets. As opposed to blue ocean, create uncontested marketplace, market space. Red ocean, beat the competition, which many companies focus on exclusively. Blue ocean, make the competition irrelevant. Red ocean, exploit existing demand. Then you're at the mercy, by the way, of that demand, given the economy. Blue ocean, create and capture new demand. Red ocean, make the cost-value trade-off a priority. Blue ocean, break the value-cost trade-off. That means doing both at the same time, increasing buyer value as well as decreasing costs. And then finally, align the whole system of a firm's activities with a strategic choice of differentiation or low cost, making the choice. Blue ocean, align the whole system of a firm's activities in the pursuit of differentiation and low cost. So a good example of this blue ocean strategy, which is in the book Blue Ocean Strategy, is Cirque du Soleil. So Cirque du Soleil is a great example of an innovative offering that created a new market space and is still today a successful company. In fact, the CFO of Cirque du Soleil was in one of our workshops on return-driven strategy a few years ago. And you can see how that framework as well as return-driven strategy would come into play for his company. The next one is Good to Great strategy. Good to Great strategy. Good to Great, the book itself, has been around since the early 2000s and it's still a bestseller. And it has some very powerful approaches for thinking about your business. One is the hedgehog concept. The hedgehog concept is based upon the intersection of three questions, of three concentric circles. What is the company deeply passionate about? What is the company can be the best in the world at, and what drives the economic engine? Now, the key of the Good to Great strategy, if you look at the left side of the slide, is disciplined people, disciplined thought, and disciplined action. And the idea of also, we'll describe in a moment, the flywheel, which is the approach that goes along with the hedgehog concept. So with that, let me ask Kip to comment on good, great strategy and hedgehog concept.
Yeah, totally agree. And the book is really a great read if you haven't. I think one really great example of this hedgehog concept was Walgreens competing with Eckerd drugs back in the 1990s. Walgreens took this approach, defined its hedgehog concept. They were passionate about pharmacies. They said they were best at convenient drugstore. And then economic engine, their key metric was profit per customer visit. And that was a critical economic indicator for their approach here. And that's also an area where management accountants can really especially contribute, as far as the performance measurement system, which should be measuring how successful we are with our big strategy, or in this case, their hedgehog. And so they made changes like they changed the way the store is configured and laid out, the way employees are rewarded and staffed, the inventory managed. And if you haven't heard of Eckerd drugs lately, it's because they went out of business. And Walgreens really was very successful. So I like that example.
Thank you, Kip. Yeah, Walgreens is a great example. It's actually a Chicago area company, so close to my home of DePaul University. And I'm very familiar with the company and its innovative offerings. The next slide, a little bit more in depth on good to great strategy and really taking it and integrating it with return-driven strategy. So in the strategy courses that we offer at DePaul University and our executive workshops, we try to integrate frameworks together. It tends to make them more value-creating in the process. So in the case of good to great strategy, you can see it circled on the left side of the screen is confronting the brutal facts. Okay? And the question is, okay, how can we confront the brutal facts in terms of how good is our strategy? And that's where we use the return-driven strategy framework to do that, to confront the brutal facts and identify how good is the strategy in terms of creating sustainable long-term value using the 11 tenets and the 3 foundations. And in the book Driven, we actually have diagnostics for each of those tenets and foundations. So it allows you to really operationalize the confront the brutal facts concept. Then as far as the hedgehog concept is really looking at different parts of the return-driven strategy framework as far as how it relates to the unmet needs, the genuine assets, how it relates to the economic engine metrics, which is the foundation, discipline, performance, measurement, and evaluation, and then looking at the entire holistic part of how the hedgehog concept could be operationalized. And then finally, the flywheel itself. Jim Collins recently published a short monograph, Turning the Flywheel, which is an excellent resource. And in it, he describes the flywheel concept. And to give a good example of the flywheel, let's take a look at an example we're all familiar with, especially during this pandemic, and that's Amazon. We're all familiar with Amazon. So Amazon, if you take a look at it, if you were to imagine at 12 o'clock, we're going to go clockwise now. At the very top of the clock, so to speak, you'd have, what's the objective? Lower prices on more offerings. That's at 12 o'clock. If you go down to 2:30, 3 o'clock, that will result in increased customer visits. And then if you go down to like 5 o'clock on the clock, you'll say, okay, that'll attract more third-party sellers. Continue on to 7 o'clock on that diagram, you'll see, okay, expand store, extend distribution. It would be the result of that. And then finally, continuing on, so let's say 9 o'clock, grow revenues per fixed cost. And then that will continue the process and then go on again back, complete circle to lower prices on more offerings. But this is what we call strategic momentum. The flywheel itself provides a great way to understand how the company can create strategic value-creating momentum in a business. And if the company hasn't addressed that, they have a risk of faltering. So with that, I'm going to transition to strategic risk management framework. Now, this is something that, especially in today's environment, is important to do as part of strategic analysis. We cannot ignore the implicit risk in our business strategies. So if you look at this framework, and this framework, by the way, is described in a recent 2020 COSO paper, Creating and Protecting Value, Understanding and Implementing Enterprise Risk Management, which is available on the COSO website as a free download. But it describes how to use this framework. It also describes a 7-step process for conducting what we call a strategic risk assessment. And it's also, by the way, was the subject of several strategic finance articles by the IMA, this framework as well as the strategic risk assessment process. So if you take a look at these risks, it looks like very similar to the return-driven strategy framework because it was derived from that framework. So, for example, customer risk, on the second row, customer risk, if you fail to fulfill otherwise unmet customer needs, you face customer risk. If you target the wrong customer groups, you face market risk. If you fail as a company to innovate your offerings, you face innovation risk. If you fail to deliver your offerings effectively and efficiently, you face operations risk. If you fail to brand your offerings, you face brand or reputation risk. If you fail to be vigilant to your partnering activities, you face partnering risk. Value chain risk is a big problem nowadays in today's economy. Employee engagement risk with the pandemic is a big risk area right now. Planning risk, being able to plan for growth as well as take care of current business. Communication risk, especially in today's highly charged and fast-moving social media environment. Communication risk is a very important issue for companies to address. And then what genuine assets are at risk in terms of your intellectual property and others. So this is a framework that will complement any strategic analysis, meaning that if you're going to look at strategic analysis of a company, it would be advisable to consider part of that analysis doing a risk assessment of the strategy. Chip, I'm going to ask you for your comments because you're familiar with both those frameworks.
Yeah. Oddly, strategic risk is probably an under-addressed risk that companies face. We tend to think more of hacking disasters and other things that could happen, big frauds, et cetera. But this is, this is a really cool framework that we have up here to really help you cover the bases of the different types of risks that you can encounter. And, we mentioned scenario planning earlier. This could be implemented well, I think, with scenario planning and identify what are some really key risks and some potential outcomes here and how to address it. This is a very, I think, thorough framework for risk management.
Thank you, Kip. You mentioned scenario analysis. In our SMA, we describe the LEGO group case study on strategic risk management. And part of that was their use of scenario analysis, scenario planning in their strategic risk management process. And by the way, there's an article that I think we reference on strategic risk management at the LEGO group, which is published in Strategic Finance, which gives a good perspective of how that was used in their process. Thank you, Kip. So now let's move on to the next slide, and I'm going to ask Kip to take the lead on this one in terms of where do we start? Where do you start in terms of using the SMA? And let's begin with the first bullet point. We would say study the SMA, strategic analysis, methods for achieving superior and sustainable performance, available on the IMA website. As Kip mentioned earlier, very important to understand the business, which you do as CFOs and management accountants. Develop an action plan to improve strategic analysis in your company. Choose one or two tools and try them. This is a good approach, right? This is something that Kip mentioned earlier, which is choose one or two tools and get them to work, and then you get confidence and momentum in the process. Start with a pilot study. If methods show potential, then you can become the champion for their use. And it also will help in the change management process. And then finally, after you gain some momentum, work on building support of the tools in your company, especially among top management. So this is a process, incremental process. Your comments, Kip?
Yeah, thanks, Mark. Yeah, I mean, this webinar might seem a little overwhelming. I talked about these several methods of strategic analysis. We had 3 different realms or groups: the environmental scans, competitive analysis, like Porter's 5 forces, the internal-external analysis methods, return-driven strategy was mentioned, of course, SWOT analysis, and then the innovation category, like the blue ocean strategy. You know, first of all, this isn't a complete set of strategy analysis methods. There are definitely others, but for the SMA, Mark and I felt that these were a good representation of tried and true, as well as upcoming methods that really should be considered. So, you know, this seems like a daunting task. In our surveys of our IMA members, we rarely hear, hey, I've got some extra time, what can I do with it? It's just the opposite. We're so busy. Where do I start? Well, you know, number 1 bullet point, not a shocker, you know, we encourage you to read through this SMA and get a good overview, so to speak. But that understand the business. I mean, I would say don't proceed with any method until you've got some understanding of the business. Now, you're not going to be thoroughly familiar with it, but get a good idea of what the major drivers are, the major challenges we're facing, the major threats, etc. Then you're going to be in a much better position to help and maybe even lead the strategy analysis process at the company. The you know, the pilot study, start with a pilot study. You know, maybe there's one aspect of your business that has been fading fast and needs some innovation. Maybe you start with a part of your business. Maybe you start with a process in your business. I mean, strategies are built and executed based on activities of the firm. So it might require some new processes within the company to help you achieve what those breakthroughs need to be. And also, you know, again, referring to the Innovator Dilemma book, you know, he talked about, hey, when you're trying a major new type of innovation, you know, make it a separate entity, not that doesn't have to hit the same ROI numbers as the rest of the business. It might need a place to grow, so to speak. So don't bite off too much than you can chew, but try to learn it, see how it works at your business. The culture might very well need to be changed. There may need to be more strategic thinking, especially among the finance department. And if nothing else, make strategy analysis part of the budgeting process. If they're separate, that's a good place to start.
Great points, Kip. Great points. Kip mentioned the understand the business, and I would say, and I think Kip agrees, that the strategic analysis tools and frameworks will help you to better understand the business. It'll give you a different lens for looking at the business. And that's a big plus with the strategic analysis skills that you can develop by starting with our SMA. And then Kip also mentioned, the innovator's dilemma, and if you have something new, you keep it separate, and that would be relevant for the strategic life cycle analysis, where we take those startup, high innovation segments of a business, and we want to invest in them differently than a mature phase business. So we look at that life cycle model as a way to make sure we're making the right decisions relating to reinvestment in resources based upon where the company is in the life cycle. Great. So with that, let me turn over to Bill for the 5th poll question.
Thank you, Mark. As with the previous questions, you may respond immediately while I read the question and response options. If you have trouble viewing the question, please refresh your browser, which should correct the issue. Our 5th poll question for today is, what type of internal or external training on strategic analysis would be most useful? Is it A, how to use strategic analysis tools, B, how to present strategic analysis, C, how to ask the right questions in conducting strategic analysis, or D, case examples of strategic analysis? And obviously, these are options that we at IMA could consider for future webinars, but also within your organization might be appropriate. After you select your answer, please remember to click the Submit button to be sure that your answer is properly recorded. Let me also mention that there's still a little bit of time if you want to submit any questions for Kip and Mark to respond to when they're done with their formal presentation. You can use the Q&A function on your screen. Now I'm going to turn your attention back over to Mark, and we can take a look at the results.
Thank you, Bill. So let's take a look at the results. So the results, I think, remember, how to ask the right questions in conducting strategic analysis. Very good point, because I think, obviously we have different frameworks, but what are the right questions to be asking when you're doing strategic analysis? And then followed by the other ones. Kip, your comments.
Yeah, right. I mean, to intelligently ask the right questions, you've got to understand the business, and it might be which comes first. If you're not really understanding the key aspects of the business outside of finance, then ask questions that will help you to understand, and then you can kind of up the game on the types of questions that you ask, and then even what type of framework or tool that you want to use. So I think that is a great one. Each person's going to have their own individual needs. And by the way, I would like to say something. We might have some listeners here today who company failed, or they got furloughed, or it's not looking good, or maybe you just need a change. These methods can also be used for us personally to identify, what are our strengths and what opportunities could I pursue. So all these things can be done personally as well.
Yeah, I agree with Kip. The last year we did an IMA webinar, which is, I think, a recorded webinar now, on leadership-driven strategy, which applies return-driven strategy to the individual leader and careers in particular. So that could be something relevant for people that are in that situation. And also, I think, a lot of companies, I think about, if you look at due diligence, if you're currently working for a company you should always be doing the due diligence about the company that you are working for currently, obviously, because, you know, how risky is it to stay as an employee, right? And also, if you're making a career move, you're making a move from one company to another, using these strategy tools is a good way to do what we call due diligence on the company that you are going to partner with, right? In fact, I just had a discussion with a alum of mine from DePaul, and she was she had a really good job making another potential career choice for another job offer she just received. And I basically said, you know, a good idea to use return-driven strategy or some other framework on doing due diligence on company A, where you're at now, and company B, where you're going. So with that, I guess we're right now at the question and answer period, Bill.
Well, thank you, Mark and Kip. That was really quite expansive, and I'm sure it whet everyone's appetite to dig in deeper and to try to find out ways to use these techniques and models within their own life and organizations. If you would like additional depth on any of the frameworks or models, you can download the SMA from the IMA website. And you may want to also consider the CSCA program, which will allow you to enhance and certify your knowledge. So let's begin the Q&A section based upon the comments and questions that have been sent in, and there's been just more than I can keep up with, but I'll select as many as we can get to. So the first one, and let me steer this one to Mark. Which strategy frameworks do you think would be best to start with if you're just getting involved in the strategic planning process?
That's a good question. You know, I think just getting started in the process, I would perhaps choose as a assessment, I would do SWOT analysis, and then I would do return-driven strategy, because you can use them together, by the way. And I would do SWOT because it's easy to use and it gives you some good information to start out. I would use return-driven strategy because it gives you a holistic view of the strategy of the organization, and it can be integrated with SWOT analysis to you know, increase your expertise in strategic analysis.
Great. I mean, all of these techniques are evolutionary within an organization, and you can get into deeper usage and best practices and what have you. So it seems like a logical path, even if you're trying to both educate as well as implement some of the techniques. Let me go to a question now for Kip. The question was, how does your SMA help candidates prepare for the CMA or the CSCA exams?
Yeah, thank you. As a CMA and CSCA, I'm very happy to talk about that. You know, strategy is a big part of the revised content of SMA. I'm sorry, of the CMA. I'm talking about SMA so much today. But on the CMA exam, Part 1, financial planning, performance, and analytics. A big part of that is Part B, which is planning and budgeting and forecasting, which is 20% of the content, and strategic planning is a big part of that. It also comes into play on Part 2 of the exam entitled Strategic Financial Management. There's a Part D on risk management, including enterprise risk, and the strategic risk assessment framework that Mark discussed earlier is really a great source and great reference for that section. Now the CSCA, of course, certified in strategy and competitive analysis, as you might guess. This SMA and content are going to be helpful for that. There's three main parts of CSCA. The first one is strategic analysis, which is 25% of the exam, and then Part B is creating competitive advantage, which is 40%. So we're talking about content related to up to 65% of the exam. Now, there's no chance that the SMA would adequately prepare you for the CSCA. I do highly recommend the CSCA, however. I'm really glad that question came up because it's really a sound way to develop and even test your knowledge in this area, which, as we're proposing, is really important right now. And along with the CSCA, IMA has a learning series, Strategy and Competitive Analysis learning series, which is excellent and very thorough. So highly recommend that for those who really want to develop their skills in this area.
Thank you, Kip. Let's switch back to Mark for one. I'll let you catch your breath. Mark, the question was, how can a CFO and finance organizations develop training programs that will help them develop their skills in using the strategy frameworks that you've discussed today and are in the SMA?
Yeah, that's a great question, Bill. The work that I've done over the last decade with CFO teams, finance organizations, and at DePaul University, working with a lot of CFO teams and finance organizations to help them really design their specific development training programs. Now, again, I think the SMA would be an element of that or a component of it. I think that designing it would be involving what are the strategy frameworks that the finance team could most use in a valuable way in their training. And I think it's something that you put in, you phase it in. I think that you introduce, a strategy framework, and then another one. You try to put together some working groups to apply it, and so forth. In the courses that we offer at DePaul University, we actually use an approach where we introduce the strategy frameworks, and then we give these working groups, if it's for a company, we give them a strategic issue to address, and then they come back and report on it. So it's really applying the knowledge as well as learning the knowledge, because I think in terms of development of training programs, it's important to have some tangible results from the training that reinforce the learning. And I think that's another role that the IMA can play potentially in this area.
Very good, very good. This is mostly a comment that came in, but I'll leave it to either of you if you want to react. One of the attendees said that SWOT sometimes fails miserably when management is not intellectually honest with themselves regarding strengths and weaknesses. So I'm just wondering if you have a perception on whether the brutally honest assessment has been adopted by most organizations, or if that is really an impediment to successful knowledge and implementation.
Let me take a stab at that, Chip, to start. Yeah, so I agree. I think that's always a dilemma, right? And that's the reason it's often good to have a objective facilitator do a SWOT analysis. And I've seen many cases where, the SWOT analysis is very highly skewed toward the strengths, very little on the weaknesses. But and I would go back to the quote from Jim Collins, confront the brutal facts, because SWOT analysis and any strategy analysis is not going to be valuable unless you do confront the brutal facts and are very honest about where the company is in terms of its strategy. Chip?
Yeah, I mean, this is more or less the first time we've gotten into organizational resistance, which is one of the biggest hurdles for pretty much implementing anything new or changing thinking, because, again, leaders tend to have their strategies, and as the bakery example earlier, you got CEOs say, I've run this business for 30 years. I know everything. But you just have to convert, those brutal facts, they may there might be things pertinent now that weren't pertinent 10 years ago, or I don't know, even 10 months ago. So you've got to ask those hard questions, question every assumption, and again, we talked earlier about doing a pilot study of some kind. That's where a pilot study can help. If you can show a little success, then that gives you some evidence that, hey, this might be worth pursuing. And that's really what it's about for trying to champion any cause within the organization is, what's your evidence? Make a case for it, make it logical, address the possible arguments ahead of time, and good luck.
Great. Well, we're rapidly running out of time, but let's try to squeeze one more in. And that question from one of our viewers is, in the real world, the rate of change in technology is usually faster than the changes in the organizational culture. What do high-performing companies do to bridge this gap?
Let
you jump on that one?
Let me take a first shot on that. So, obviously technology is changing at a rapid rate, and that impacts a lot of the business strategy as far as operationally. It impacts the risk, because if you just take a good look at cybersecurity risk, in terms of how companies can be more proactive in terms of in fact, one of the things we're doing at DePaul University is working on a project on incorporating strategic management, or I should say cybersecurity risk, into the strategic management process, which is a necessity today. And I think that the technology drivers are out there. And I think that you're going to see increased adoption of the right technologies for these companies moving forward.
Great. Well, yeah. I would love to, Kip.
Go ahead.
Unfortunately, we're very tight on time now, and in deference to everyone's schedules, I think we're going to have to turn it back to Margaret, but I'm thrilled we could have this great dialogue, and hopefully we'll have an opportunity to do more. So, Margaret, you want to take it away?
Yes, thank you. At this time, I'd like to thank our presenters, Drs. Mark Frigo and Kip Crumwitty, for sharing their knowledge and expertise with us. We're very appreciative that they've made time for IMA and for our audience today. And also, thank you, Bill Duchan, for moderating today's event. I want to again thank all of you for your participation in today's event, your commitment to IMA, and your professional development through IMA's Strategic Management Series. I look forward to spending time with you again soon, when we'll enjoy some more valuable and interesting information through the IMA webinars.